Good evening, ladies and gentlemen, and welcome to another online platform from the ITA as we continue to give you relevant information that is pertinent to present times. Obviously, it's a very difficult time, challenging times, but the ITA has set up this platform to benefit you, our members, and others to show you different ways of overcoming these challenges. Today, we have EFM, and Gary Jessen is going to go through some cash projections, cash generation, reducing cash burn, and forecasting. So without any further ado, over to you, Gary, and if you could tell us more about this area.
Thanks, Paul. Yes, everyone, good afternoon. This is just aiming to be a real practical session. I work with a network of part-time FDs, working with a lot of SMEs across UK and Ireland. And really, this is just to give some feedback on things that we think you should be doing and things we're seeing from the front line. Gives tales from the trenches, so to speak. I sort of structured this really around a few areas. Really wanted to chat through things like, what can you do to get more money in? What can you do to stop money going out? What can you do to work with people that you owe money to? Also talk a bit around forecasting, how important that is at the moment. And then some bits around actually if you've got shareholders, how you should be talking to them about money. And just to recap on some of the government reliefs, if that's of interest to people. Conference, we spoke a bit about that last time we were on. So really just on the cash generation side of things first, people are still trading. I know there's a lot of businesses shut down. In reality, there are businesses that are still trading, and there's some businesses doing really, really well at the moment out of this environment. So my message, if you've got revenue or you're trading with people, it's about making it easy for them to trade with you. And that might mean you've got to do things slightly differently. You might want to break units down. You might want to charge by the hour instead of charge by the day. You might want to give them offers, give them discounts, basically give them reasons to buy from you. As well as that, giving them different platforms to buy. Working with an online clothing business. They've got a lot of return stock that they've just launched an online eBay store, which they've never done before. So they can put the product out through a different channel. And incredibly, there's a lot of people at home at the moment that seem to be doing a lot more buying during work hours on eBay than perhaps they would do if they were in the office. So there's a lot of online activity going on. You can do things to encourage them and get your products and services out there, but just make it easy for them to buy. Big amounts are always going to be tricky. Break them down into smaller amounts. Which is the same also on sort of payment terms. Again, however you're trading with your customers, think about, can you trade differently? If you've got a chance of making instalment payments or money in advance, change the percentage. Get more upfront if you can. Front load any invoicing where possible, but also get your bills out. Again, big bugbear of mine. Lots of SMEs always wait to the end of the month or a couple of weeks after the month end to get their bills out. You should be billing as you go nowadays. Because the quicker you get your bill out, the quicker you stand a chance of getting paid. And bear in mind, whoever you've got in your finance team, this is an absolutely crucial part at the moment. Make sure that someone else can do the billing in case your main your main accounts person is laid down low themselves, either by the virus or self-isolating. Right? You need to have your accounting, transactions and functions in the hands of more than one person through this environment. Payment plans, really tough to get money out of people at the moment. We know that. I always sort of take the view I'd rather have 50% of the bill than 0% of the bill. So get into the habit of actually, if you need to do something, speak to your customers, put a payment plan together. If they can afford to pay something, it's far better they do that than you wait and get nothing at all. Credit's an interesting one. So credit management, this is all about new customers. It always feels great, I think, if you're in sales or any business when suddenly you land a new customer. I guess my word at the moment is ask yourself why they're coming to you as a new customer. A slight sort of bit of cynical view on life, and it could be that they are a genuine new customer and it's that one you've been chasing for months on end. In reality, it could also be that no one else has given them credit. And they're shopping around to spread their credit risk around lots of different customers. So just ask yourself that question. Do I actually know this customer? What terms do I want to trade on them? Yeah, maybe if it's a new customer, you should go pro forma or cash in advance. But just have a healthy degree of skepticism around any new business at the moment, particularly if it's someone you've never heard from before. A lot of fraud also in that space. Credit controls, the other bit around getting your money in. Too many small companies are very, very poor at credit control in my experience. And also credit controls sort of, when people tell me they're doing credit control, they tell me they've sent an email. Well, look, if you're anything like me, I am getting absolutely bombarded by emails daily at the moment. And if you're attempting to collect money by email, I can guarantee, it's just not going to happen. So this is what I call good old-fashioned, get on the phone and talk to people.
On that, Gary, I just want to bring questions come in on that front in terms of if I don't have any practical experience in credit control, how do I go into that?
Yeah, so there's a lot of people out there, whether it's people like us, people like your accountants, freelancers. There are people that spend their life just doing credit control. Right, it's a particular skill. It's a particular sort of way of doing. Since the advent of the email and the internet, people seem to be shy of talking on the phone nowadays. So there are resources that you can bring in, but more importantly, this decision, Paul's got to come from the top, right? This is a board level decision, right? There's got to be a credit control ethos through the business. So I would suggest if there's nobody natural in your business, look outside or look inside and look to either the sales resource or the directors that did the business in the first place. Right? They're the people with the customer relationships. They're the people that should be able to pick up the phone and ask questions about how you're going to get paid. The old adage, a sale is not a sale until it's in the bank, in my view. Right, so lots of ways of doing it. It's got to be, I would say, one of the number one agenda items in any finance or any board discussion at this point in time.
And if we're considering we'd say an early offered payment settlement, what is the kind of industry norm for a sensible percentage in that regard?
Yeah, look, it varies across industry, Paul, and days gone by, sort of early settlement type discounts went out the window. But I think you need to look at your cost of borrowing. If you've got debt or interest costs at say 5%, anything around there or under there is a good deal. It's saving you money. But typically, what I see, 2.5% to 5% is not an unusual amount. Obviously, if you've got low margin products, you might need to think differently on that. But it's about getting the money in your bank account, but don't give away all your margin. If your margins are thin, don't give it all away. But look, there are people that will do deals if they think there's a bargain to be had, and if they've got the cash. So around that sort of percentage, work the maths out, get your finance person to check what your margins are, what you can give away. But 97.5% in the bank is better than 0%. So think about that as an option.
In terms of the sensitivity of the time as well, I mean, there is a balance between being strong in terms of your message and the sensitivity and taking into consideration what every business is challenged for at the moment. So from that point of view, when should I consider things like legal action, or should I be considering things like, when they're looking for directors to sign personal guarantees in that regard? What's your feeling in those areas?
Yeah, I always think, Paul, that things like legal action's too late. You need to be talking to your customers very early on. Right from the minute you send a bill, I can guarantee at the moment that if you're sending a bill by email, it could be sitting in someone's email account that's off sick. Right, so it's probably not even made its way to an account system, and therefore your chance of getting paid is almost zero. So that's why you need to go back to real basics. Send an email, pick up the phone, have you got the invoice, is it okay, any reasons why you can't pay? Then remind them during that call, the payment terms are 7 days, 14 days, 30 days. Right, so you've got to keep talking to your customers. Pick the phone up, if your payment terms are 30 days, pick the phone up after 21 days, just to say, checking you've got my invoice still, am I on track for a payment? If they can't pay you, you'd hope your suppliers and your customers, everyone is going to be honest through this. Some won't. And you start to build that into your expectation, your reality. If you're getting, personal guarantees are probably not worth getting, and you're probably not going to be enforceable. And if there are PGs out there, it's probably the banks that have already got them anyway. The reality is you can still follow things through the debt collection routes, through debt collectors, through county court judgments. But as I said, I think that's probably going to be too late in many instances. So to me, Paul, it's about talking to your customers, negotiating, keeping in touch with them, talking to them probably more regularly than you do. And if you do smell a rat, then you need to think about escalating. But my guess is in the environment, chasing the legal route, if you don't get on it very quickly, it's probably going to cost you more money that you won't recover. But it's an ultimate sanction to use.
Okay, how do I get the 4,000 employers allowance in cash?
Yeah, I've got that, Paul, coming up. So it's one of the ones under the government scheme. So most of you, if you run payrolls or your accountants run payroll for you, every year as a small company, and the rules have changed slightly this year around state aid, if you pay less than 100,000 national insurance through your business a year, you can claim a grant back from the government straight through your PAYE. Okay, this year it's £4,000, and the way you claim it back is you reduce your next monthly payment to HMRC. Okay, so it's not a pay and get it back. It's a complete reduction in the money that you owe to HMRC for PAYE and national insurance in April, which you would pay in May. And if you haven't got the 4,000 fully utilised, then you claim the balance the following month. Okay, so simple way to get your money back. Just picking up on the flip side of income and back to some of the costs. I've touched on this a few things before, but most businesses, in my experience, have a load of costs that they probably don't value or they probably don't realise they're spending. And it's all of that sort of small scale, paying for your monthly apps on your direct debit or your credit card, your gym membership, training, sort of some of the marketing costs, some of the travel. There's a lot of costs now that you can turn off. That you just won't need, and you probably won't even miss if you switch them off. So recommendation, go through all your bank statements, all your credit card statements, look at all of those sort of sub £100 regular payments that are going out of your finances. Ask yourself whether you need them, switch them off.
And how long into the future should we be forecasting, particularly when we don't kind of understand what's going on or how long this is going to go on for? So how long into the future should we be looking at forecasting?
Yeah, so this environment, every business should forecast at least 12 months in advance. My feeling at the moment is you need two forecasts. You need a rolling, what I call a rolling 3 months. Right? You really need to be looking, in some businesses even daily, weekly, but 3 monthly in advance with a 1 year look. Because the reason I say that, money's tight at the moment, right? How long this is going to go on, we don't know. But if you look over the next 3 months, your challenges are going to be almost certainly around payroll. You are going to have payroll to come up maybe at the end of this month, and you may be furloughing staff. My feeling is you won't get that furlough money from the government until May at the earliest. So you've got a decision to make. Can I afford to make payroll in April, or do I need to have a conversation with staff to say, can they hold on to their pay, or can I pay them less and I'll pay you when the furlough comes through? And for some businesses that happened in March. In fact, I think Laura was saying to me she knows a business where people at the end of March still haven't got their pay yet. Okay, so you really need to be on top of things monthly, and if you're having these conversations around credit control and with your suppliers, you can be building that into your regular cash flow so you know what's going on. The reason then you also look longer term is there's a lot of, I guess, debt being kicked down the track at the moment. That's being deferred under your government scheme. Your PAYE can be deferred under a pay to a settlement scheme. You may be getting mortgage holidays, you may be getting loan holidays, you may be getting asset finance holidays. All of this is just getting pushed further and further back. And all the government debt at the moment is all forecast to be repaid by 31st of March next year. So if you don't have a forecast that gets you to that period of time, you're potentially going to be facing a cliff edge come March, and you need to start thinking about building facilities and payment plans that take you up to that date and beyond, as well as something short term. And it's really important on the forecasting that you consider everything. Again, so many people, in my view, miss those, what I call those lumpy items. you've got a quarterly rent bill, or you've got a quarterly VAT bill, or you've got an annual corporation tax bill. You need to cover everything. You need to talk to your finance person and think about every scenario. You need to be pragmatic about money coming in. Your terms might say 30 days, but it's probably going to take a bit longer at the moment. So you need to stretch your money out a bit further, and some of it will also go bad.
Is there any templates in that regard or software available to help us with that scenario to be considered?
I could probably share a template with Laura afterwards. Paul. Things. There's industry standard packages out there. Most forecasting packages tend to be better at looking backwards than forwards. But the ones that, if any of you are using something like Xero as an accounting product, packages like Float is the standard one, I would say. It is an app that bolts on to Xero, and that will help you forecast forward. Other than that, it's an Excel spreadsheet, which if you've got anyone finance or accountant in your team, they should be more than capable and competent of helping you through that.
Okay, in the area of R&D, we've spoken about R&D in the past, but one particular area I want to just touch on is how to accelerate the R&D works claims.
Yeah, so if any of you are in this sort of space, you should know that normally what happens is you get to your year end and then you put together your claim, which hopefully results in a refund. Now, the government have gone on record saying that they will refund that money in 4 to 6 weeks. But that's 4 to 6 weeks from when you get your claim in. Right, so in my experience, some of the accountancy practices are, obviously themselves snowed under and busy. Then they're not necessarily going to get round to doing what works for you best as quick as you need it. So 2 things you can do. One, you can be, if you're a March year end, you could be now doing your year end numbers, getting your accountant engaged, getting your accounts and tax return finished, so you can get that in and accelerate the cash that comes back into your business. That's one way. Second way you can do it is if your year end is yet to happen, let's say your year end's June, under accounting rules, you can bring your year end forward to say March and run a shorter accounting period of 9 months and make your claim sooner. So it brings your whole claim forward by 3 months. So it's worth considering. The third thing you can do once you've got a claim in, there are an increasing amount of funders out there now that will advance money against your R&D claim. So if it is taking time to get in from the government, you can actually apply to one of these lenders. They are relatively pricey, but they will bridge fund the gap between when you put the claim in and when the government pays you your refund. 3 ways there that you can get your R&D money in a bit quicker.
Okay. And could you give us some practical experience in terms of any government schemes that are out there now that you've seen engaged and been successful so far for businesses?
Yeah, so look, you're all aware of the ones and some of the bad press that's going out there. The ones I would say for small businesses, the rates relief. So if you're a small business that gets rates, 0 rates or reduced rates, or you're in that hospitality sector, the £10,000 or the £25,000, if you're eligible, claim it. We are seeing lots of that money coming in already. Millions of pounds is being reported. I know one company that in Newcastle, you put a claim in and had the money in the bank account in less than 5 working days. Okay, so the rating authorities have got their act together, and there's 10 grand, possibly for most SMEs, easy money, get in the system. You will need your rates number. You will need that number. You will need a bank account. It's a very simple form. It takes 4 or 5 minutes to fill in, but the money comes through very quickly. Easy win. There's a grant out there at the moment. This one's a bit of a short window, but Innovate UK are currently advertising a grant up to £50,000 if you have any tech or can come up with some ideas that enhance society post COVID-19. Okay, that grant is available for application. It's a £20 million fund through to Thursday, 17th of April this week. At 12 o'clock, that window closes. So a very short window, but if you can got anything that comes out there that can help. So, for example, I went and spoke to a local hospice, and you wouldn't expect a hospice to apply for an Innovate UK grant, but they've come up with some interesting area around how they deal with bereavement and bereavement counselling through this difficult time. and they're going to make an application for a £50,000 grant. Whether they'll be successful or not, I don't know. But you know, these things open up and usually close down very quickly. But there is £20 million of funding at the moment, free money, subject to other conditions. It's on the Innovate UK website. I can give Laura the link, who can circulate it if you need to find it. But the window's very tight on this one because it closes this week. Other things out there, if you're dealing with things like PAYE, VAT, you know, again on the VAT, cancel your direct debit. You know, that's an automatic deferral. If it's PAYE, you probably still need to call up. I'm also hearing now, if you've got import VAT and duty, you can call your duty deferment team and ask for that to be deferred. So that wasn't out there last week. You know, that's come in fairly new because it's, again, government are reacting to industry sectors and pressures when people realise they've been missed out. So VAT and duty deferment is now back on as something you can get a time to pay arrangement on. I guess the other big one, as I just touched on, is furlough. The portal for furlough will open this, now, 14th, a week yesterday. So Monday next week, the government portal will open for you to make furlough claims. Again, you will need a PAYE government gateway registration. If you haven't got it, you need to talk to your accountant or your finance person to sort it out. And you will need details of the individuals, their PAYE reference, the NI reference, the amounts to get that claim in. And I would imagine the gateway is going to get bombarded pretty heavy on this one. So again, word of advice, if you can wait a few days, you might be better off holding back and then doing it in the second wave. But that portal will be open, and that's where you can claim 80% of staff pay for furloughed members back.
Okay, we've got a question there, Gary, that's come in that they're just over the 15,900 rateable value to claim the refund. Is there a possibility the government will review this bar?
I don't know that, Paul. I suspect not would be my instinct. I think, they've probably done what they can, in that case. You might want to check that you're at the right rateable value. And that's going to be difficult to change in this environment. But have a look at other buildings around in the same unit, talk to neighbours, talk to similar businesses. If you've been wrongly rated above the threshold, there might be a claim to be had. I don't know what government policy is, but I can't see them. I can't see them changing that at this point in time.
And finally, in terms of, I know it's a moving target, but we've now kind of got into a scenario where we've gone from crisis management into realization management, really. And you can see this in the portal itself in terms of what we're talking about. So in your viewpoint, how far are we away in terms of, changing our ways in terms of getting back into things and doing forecasting? Like, how far is this lockdown, in your estimation, away from breaking out?
I think what we're seeing from other parts of Europe, I think different sectors will come out of this possibly at different times. My biggest fear is for those companies that are in the seasonal trade sector, around hospitality and summer trade. We're going to be locked down, I suspect, through to May. And if these businesses are not opened by June, and any degree of a business, I actually think a lot of these government schemes will be pretty futile and worthless. And one of the things that directors of probably seasonal businesses need to give serious thought to. I hate to be doom and gloom here, guys, but if you cannot recover from a seasonal trade, just kicking your liabilities down the track is storing up a problem. And you should either think about shutting up shop or a major restructuring of your business. Unless the government takes a view to write off some of these deferments, you are storing up a huge liability for the future. So I don't think I answered your question, Paul. My instinct is we're going to be locked down for many more weeks yet, and then it's going to be gradual, and businesses are going to take a while to build back up. We know the furlough scheme's in play to the end of May, which I guess is where the government was probably seeing these schemes needed to work until then, with maybe some green shoots after that. But even if businesses open after that, how quickly are people going to get back into transacting and ordering and doing all of those things? So I think we should be planning for several more months, even if we start to open up, which means looking at your forecast, looking at your runway, agreeing with creditors, payment plans that go as far as possible, taking out costs that you don't need, billing quickly. This is all really common sense, good, sensible stuff that you can be doing now, and hanging on to your cash now as long as you can. And even if you don't need cash now, a prudent person in me would say go and apply for one of these loan schemes anyway. Because actually, if you've got buffer and a safety net there, you'll be in a better position as this starts to come back, because you'll have funds that you can invest to get things moving quicker.
Great, thank you very much, Gary. And this recording will be available, of course, on www.vitacommunity.org. I'm sure we'll be hearing from Gary again as we go forward on this portal. And I'd like to thank you for joining us, and Gary, and all the information you've given us today. And we'll see you soon on the Vita portal again. Thank you very much. Goodbye now.
Thanks, man. Thank you.